Hello viewers, welcome to my channel. I'm Hasham Ali Khan. Last two videos I have explained you about the residential status of a person. Now in this video I'm going to explain you about incidence of tax. That means the scope of income. Which income to be included and which income to be excluded in computing the total income of a person. Remember, every income is not taxable. Some incomes are not to be included. That means we have to find out the scope of income. So in this topic, incidence of tax, I'm going to explain you. In examination, you will get a theory question regarding explain the provisions regarding incidence of tax. These provisions are given under section 5 of the Income Tax Act 1961. So before proceeding further, take the screenshot of the points which I have written on the board, then I'll explain every point in detail. Now, incidence of tax. Incidence of tax means the burden of tax payment, the scope of total income. That is called incidence of tax. According to section 5 of the Income Tax Act 1961, the concept of income and place of earning the income, that is important. First of all, the income, what do you mean by income and where the income is generated. And the place of earning the income is important. Whether the income is earned in India or outside India is the deciding factor in order to calculate the tax liability. So in order to calculate the tax liability, we have to find out what is income. We must know the meaning of the term income, where the income is earned, whether income is earned in India or income is earned outside India. And this will be the deciding factor in order to apply the tax liability. Section 5 of the Income Tax Act 1961 deals with the scope of total income. That is, which income to be included and which income to be excluded in computing the total income during the previous year relevant to the current assessment year. Now, the tax liability depends on residential status. In the previous videos, I have explained you the tax liability always depends on the residential status of the person during the previous year. So many provisions are there how to determine the residential status of an individual, HUF, company, firm, etc. Already we have discussed in the past two videos. So if you have not watched, go to the playlist of my channel, select the subject income tax for the assessment year 22-23. Watch the videos on residential status. That is very important. Now, depends on the residential status, we have to find out which income is taxable and which income is not taxable. The incomes can be classified into two categories, that is Indian income and foreign income. So a person should be clear regarding the meaning of Indian income and meaning of foreign income. So first we discuss what is Indian income. Income which is earned, received or deemed to be received in India are treated as Indian income. Three words here. Income which is earned in India, income which is received in India, and income which is deemed to be received in India. These incomes are called Indian incomes. Now example, an individual, either an Indian citizen or a foreign national, receives income from. You should not think that only Indians have to pay the tax, foreigners are not liable to pay tax. It's not like that. Even foreigners are also liable to pay income tax here. So if any person who is Indian citizen or a foreign national, if they are having the incomes from these sources, then the persons, whether Indian citizen or foreign national, has to pay the tax. It's an Indian income. It's an Indian income. So what are the Indian incomes? First, salary for the services rendered in India. Any salary received by rendering the service either by Indian citizen or a foreign national. If a foreign national comes to India and work in a company, he is earning the income in India and receiving the income in India, he has to pay the tax. Even he is a foreign national, because the salary which he receives is by rendering the services in India. Secondly, rent received on the property situated in India. If a property is situated in India and it given on rent, rent is received. This rent may be received by an Indian national or by a foreigner. For example, a foreigner comes and purchases some property and he has let out the property, he has earned some rent. So even if he is a foreign national, he has to pay the tax because the property is situated in India. Thirdly, income from business or profession which is established in India. Any income from business or profession, whether the business is owned by an Indian citizen or by a foreign national, because the business is established or a profession is established in India, the income of that business or profession will be Indian income. Next, fourth, income from any asset held in India. Apart from house property, a person may own some asset and on that asset he is earning the income. Then also it is an Indian income, whether the asset is owned by Indian national or foreign national. Then capital gain on transfer of any capital asset in India. If any gain arises on sale of capital asset, that is also taxable in India as Indian income. Whether the asset is sold by Indian origin or by a foreign national, because the capital asset was in India and sold in India, it's an Indian income. Next one, any other income for which the source of income in India. Income tax always has played very carefully in making the provisions. That means it will not specifically give the cases that these are only Indian incomes. Last case, it is open head. Any income which has a source in India, that will be treated as Indian income. So whether the income is earned by Indian national or a foreign national. Then foreign income. So far we have discussed about the meaning of the term Indian income. Simply you have to remember income which is earned, received or deemed to be received in India. Whether the income is earned, received by an Indian national or a foreign national. Foreign income. If the source of income, receipt of income are in foreign country, then income received by a person shall be treated as foreign income. If a person has a source of income outside India and received the income outside India. Example, Mr. X is an Indian national. He is an Indian citizen. He is working in US. So there he is rendering the services and getting the salary. So income is earned in US and received in US itself. Then that income is called foreign income. Simply income earned, received, accrued outside India is a foreign income. Now tax liability for the associate depends based on residential status. We have already discussed in the last video also. The tax liability depends on the residential status of the person. Accordingly, tax liability will be calculated. So all the residential status we have decided in three forms. That is ordinarily resident, not ordinarily resident and non-resident. In each case, what is the tax liability? I am going to explain. Ordinal resident. If a person's residential status is ordinarily resident, he has to pay the tax on all incomes, whether Indian income or foreign income. Even global income also he has to pay the tax in India. Suppose Mr. X. We have seen Mr. X residential status. His status is ordinal resident. Now Income Tax Act says, Mr. X, you have to pay the tax on every income. Whether it is an Indian income or whether it is a foreign income, immaterial, you have to pay the tax on global income. The income earned throughout the world, you have to pay the tax in India. Because your residential status is ordinarily resident person. Resident and ordinarily resident person. Second, not ordinal resident. If a person's residential status is not ordinal resident person during the current previous year relevant to the current assessment year, his status is not ordinal resident. In that case, Income Tax Act says only Indian income is taxable, foreign income is not taxable. There is an exception to this rule. The rule is Indian income is taxable, foreign income is not taxable. This is the rule. But for this rule, there is an exception given for not ordinary resident person. if a person who is not ordinarily resident, he is having a business outside India, but that business is controlled from India, then the income earned from that business is taxable in India, even if it is a foreign income. For this person, example Mr. X, his residential status is not ordinary resident person. During the current previous year, Mr. X is having a business in Hong Kong. Now here from India, he is controlling and managing the business. All the instructions are given from India, but the business is being done in Hong Kong. The income is generated in Hong Kong, but it is controlled from India. So the income earned there is a foreign income, but Income Tax Act says, Mr. X, you have to pay the tax even on that business of Hong Kong. Why? Because it's a business which is controlled from India and your residential status is not ordinary resident. Other than business, if any other foreign income is there, that foreign income is not taxed. That is for not ordinary resident. Now lastly, non-resident person. Non-resident person, only and only Indian income is taxable, foreign income is completely exempted. Even if he is having a business outside India which is controlled from India, that income is also not taxable in India because his status is non-resident. Simply, only Indian income is taxable, the foreign income is completely exempted for non-resident person. These are the provisions. Now, if a foreign income is not taxed in the past for any reason, the same cannot be included in the total income of the SSC during the current year. Income Tax Act has given the provision. Suppose the foreign income is not taxed in the past for any reason, but current year it was found, then the past income, the past foreign income is not taxed during the current assessment year for any type of SSCs, whether he is a ordinal resident or not ordinal resident or non-resident. For everybody the rule is same. Past foreign income, if it is not taxed earlier, cannot be taxed in the current assessment. Then receipt of remittance. Remittance means transferring the money from one place to another place. Example, Mr. X is working in US, he is rendering the services, he getting the salary. He has received the salary in US. After receiving the salary, he has brought the money to India or sent the money to India, either through bank or through a person or any other means. Mr. X has sent the money from US to India. It is called remittance. So when a person is remitted the money which is received in India through remittance, that is not an income. That is not taxable because already it is earned there. Mr. X, he has earned suppose 5 lakh rupees in US. Later on, through a bank, he has transferred the money to his father's name from US to India. The father has received the 5 lakh rupees remitted by his son. Income Tax Act says it is not an income of the father. It is a remittance of money from US to India. It is not taxable in the hands of the father, recipient. Right? So in this video, I have explained you about the topic of incidence of tax. Which income should be included, which income should be excluded. So ultimately, it depends on the types of income, Indian income and foreign income. Right? And finally, the tax liability depends on the residential status. For ordinary resident, every income, Indian or foreign, completely taxable. For not ordinary resident, only Indian income is taxable, foreign income is exempted, except one case where he is having a business outside India but controlled from India, then the income of that business is taxable in India. That is the exception in not ordinary resident. For non-resident, completely exempted. Foreign income is completely exempted, only Indian income is taxable. That's all. So this is the end of this topic, introduction. The introductory part completed. Now from the next video onwards, we have to start the problems and we have to complete all the heads of income. Income from salary, income from house property, profits and gains of business and profession, capital gain and income from other sources. See, this income tax subject, little bit tough subject. One of the comment I got from one of my viewer, And he says, sir, it's very boring chapter, sir. Again, listening the same thing, only theory. We are feeling sleepy. It's completely boring. No, Baba. It is boring if you are feeling it bored. Ultimately, depend on your mindset. If you want to learn the subject, if you want the knowledge, you must have the patience of listening and watching. I'm explaining each and every point. Why the students scored less marks in income tax is the same reason. They will not understand the theory. They don't have the patience to understand, to watch the theory. See, whatever I am saying, it is not new. You can find in any textbook. The same provisions are there. But reading yourself will take 6 hours, while watching the video, it will take 15-20 minutes. The same output, in 15 minutes, what we can understand, you cannot be able to understand by reading yourself in the textbook for 6 hours. That is one of the, saying. That's why this listening of lecture is very, very, very important. And without understanding, without watching these theory videos, you will find stuck yourself in the problems. All the problems are based on this only. So this is the criticality of this introduction part. So inshallah, I will take up the problems in the next video. So if you are satisfied, give a like to the video. Share my channel among your groups, among your friends, so that more students can watch the video and enhance the knowledge. Give your comments on these videos. And subscribe if you have not yet subscribed. And by the super thanks which is given below my video, inshallah, we will start the next topic in the next video.